Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. You can post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @DougPless. I do have one announcement. This is the Bookmap February Blue Jacket competition, and the point this month is to post your trades in Bookmap. So you open up the trade control panel, take a trade, and that can either be live, simulated, or in replay, as long as you take the trade within Bookmap, mark up your chart, post it in social media, and with the hashtag free blue jacket to win a blue jacket, as well as 3 months of Bookmap Global Plus and your choice of stocks or futures data. You can scan the QR code for more information. For those of you who've seen my webinars before, please bear with me. I want to go through this very quickly to make sure everyone understands the basis of my approach to trading. So I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. That certainly applies to large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 or the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of the index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of the trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of the trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding expected trading range and volatility for the day, as well as their directional bias. And the second step in my process is execution. I look at real-time order flow on Bookmap and real-time market maker hedging flow on Spotgamma HERO to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Here's my agenda for today, Friday, February 27th, last day of the month as far as trading goes. I want to cover news items, economic data, events, and earnings. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. Then I'll get to live market. And when I get to live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started with news items. And This was the key economic data released for the week, PPI data. So let's take a look at that. This is producer price index, and pretty much across the board came in greater than expected, and in most cases greater than the previous number. So that is the PPI data. See if I can bump that up just a little bit. So PPI data, really not much reaction to that. So let's take a look at the SP 500. So that data came out at 8:30 a.m. Eastern Time. So that was right about here. And the SP 500, this is the ES Futures and Bookmap, had been moving lower for quite some time. And that really occurred just after 4 a.m. High of the session, and this is going back to 6 p.m., the open yesterday evening. High of SPY 689. Right there. Then ES broke down below the 6,900 level, and also the SPX 6895 volatility trigger made a lower high, and then all the way down to the ES lower daily expected move. And I did post that in Discord yesterday evening, that level. Back down to that level right around 9:45. And then ES did break down lower, down to that liquidity right around 68.42. Rallied up to SPY 686, and now heading down again, rolling over, slowly rolling over. All right, so those are the key levels in play. So SPY levels, SPX levels, and ES levels, all shown on this chart. And note there is a difference in price between ES and SPX. So here's SPX 6900, and that offset is 10 points today. So the ES to SPX offset is 10 points. So I'm showing SPX at 6910, the equivalent level in ES for SPX. And that does change every day, and I'd also post the index relationships that I'm using every day. All right, so those are the levels in play. We'll zoom in on this. But before I spend more time on this chart, I'm going to step back, take a look at a higher time frame. I'm going to go to SPX, the underlying index. This is Thinkorswim, a 1-year, 1-day chart. So the rally that began in April last year has now really resolved into consolidation this year. So April 25 rally up to 2026 consolidation. And noted this consolidation between right around 6,800 and 7,000, SPX is making slightly lower lows and lower highs. So let's take a look at that on a shorter time frame. Let's go to a 30-day 1-hour chart. So you can see the lower highs, lower lows, roughly in between 6,800 and 7,000. All right, let's take a look at levels on this chart. And by the way, today, just quickly before the levels, SPX did gap down below its lower daily expected move, and I do calculate that separately from the ES lower daily expected move or expected moves. And it traveled up above the zero gamma level and now trading back down below the lower daily expected move. All right, again, I post expected moves every day in the Options Dash Deck chat channel for SPX, ES, and NQ. All right, let's take a look at those levels. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. Those levels remain in place for the entire week. And note they have not been breached this week, not even close. Then the dashed blue lines are showing the lower and upper daily expected move. This is also based on the options market, based on the closing price for SPX from yesterday. Those levels change every day, and again, I do post those in Discord every day the day before. All right, those are the expected moves. Let's take a look at the Spotgamma levels on this chart. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers on a variety of trading platforms. This is Thinkorswim. I'm going to point out the key daily levels. First of all, the put wall remains at 6,800. That's a strike with largest net negative gamma that can be expected to act as support. Next level up is the volatility trigger at 68.95. Then a Spotgamma's proprietary gamma and volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. All right, the next level up is the absolute gamma strike at 7,000. That's a strike where largest absolute positive and negative gamma. So that's where most of the gamma-weighted open interest is concentrated. Then finally, the call wall has moved up to 7,050 now. So it's been pinging back and forth between 7,000 and 7,100, and today it has moved up from 7,000 yesterday. It was 7,100 on Wednesday. Moved down to 7,000 yesterday, then back up to 7,050 today. So that's a strike with largest net positive gamma that can be expected to act as resistance. All right, those are the key levels. So the only shift for SPX was the call wall shifted 50 points higher today. All right, let's wrap up our view of SPX with a 1-minute chart. So I've kind of highlighted this zone here with right around 68.70 in the middle, or the zero gamma level today, 68.68, has been acting as support and resistance. And so far today, the top of the zone, resistance. And now you can see SPX trading down below its lower daily expected move after a period of chop in the support and resistance zone, up and down around 68.70 or so. SPX trading well below its volatility trigger at 68.95. All right, that's SPX. Let's zoom in just a bit. All right, so overall today, pretty choppy price action, consolidation type price action. Let's take a quick look at SPY, then we'll get to Bookmap. So we're going to take a look at the other underlying index. And the only Spotgamma level in play for today, 685 large gamma 2 level, and resistance right around the SPY 686 level. Then there's the overnight touch of the 689 level, the round number level. All right, back to Bookmap. All right, so there's the 686 level that I just mentioned. We've already took a look at the 689 level before, overnight resistance. So really key for today, expected move, support. Look like kind of a head and shoulders or triple bottom there. And that was a good entry point for a long, right around 10 a.m. Pullback, right around 9:45, or that dip, 9:45, then pull back to the lower daily expected move, which is at 68.51, just above the ES 68.50 level. We'll talk about setups in just a couple of minutes. All right, let's shifts and levels again. For SPX, call wall shifted higher, and for SPY, the volatility trigger and put wall shifted lower, so a bearish brace for SPY. All right, let's move on. Let's take a look at NASDAQ. Again, we'll get to setups in just a moment. NASDAQ, similar pattern. Breakdown overnight, right at the QQQ, 610. Absolute gamma strike, volatility trigger just below that level, and down to the NQ, lower daily expected move, which was at 24,782 to the tick. We'll take a look at that in just a minute. So it was that exact low, according to Thinkorswim, for NQ was exactly 24,782. That was the expected move level that I posted in Discord just before 7 p.m. yesterday. Nice to know the low of the day in advance so far. All right, it looks like the high of the day it looks like those levels, we're looking so far out, those levels are right on top of each other. But the 25,000 absolute gamma strike and 2510 volatility trigger for NDX. We'll take a closer look at that. Let's go ahead and do that right now. So those are the levels in play. Zoom in on this. Take a look at the underlying index charts. So let's go to QQQ. Zoom in on this. So the only Spotgamma level in play for today is the 605 large gamma 4 level. That's kind of right in the middle of the price action or the range. Resistance somewhat around the round number 608 level. All right, let's take a look at NDX. Zoom in on price action for today. All right, so it looks like, according to this, NASDAQ came up short just below these two levels, the 25,000 large gamma 1 level, or the absolute gamma strike, and just above that 25,010 volatility trigger. All right, back to Bookmap. All right, so again, you can see NASDAQ came up just short of these two levels, NDX 25,000 and 25,010. But again, key support this morning, right around 9:45, the lower daily expected move. Again, 24,782. Let's go check that. And there it is. Zoom in on this. $24,782. All right, so those are levels in play for NASDAQ. We'll talk about setups in just a moment. Let's wrap up our positional analysis by taking a look at Gamma. So let's go to the Trace Gamma heat map. This is available to Spotgamma subscribers. What this is showing is market maker's Gamma position. Blue shading shows positive Gamma, red shading shows negative Gamma. In negative Gamma, remember we're looking for higher volatility, wider range of price action with market makers trading with price. And then in blue shading positive Gamma, we're looking for less volatility, lower volatility with market makers trading against price. So it looks like SPX is trading at a zone of mildly negative Gamma. Note also these GEX bars. This is market maker's position, again, positive Gamma. Of these strikes, this looks like a pretty narrow iron condor, perhaps, at a trader's position. So 68.30, that's a 97 percentile strike. And then 68.70, a 98 percentile strike. And either one of those targets would be either one of those levels would be a potential target. So 68.30, which is equivalent to ES 68.40, and SPX 68.70, which is equivalent to ES 68.80. So we're looking for 40 and 80 on ES. And again, SPX trading in a zone of mildly negative Gamma. And certainly acting more like positive Gamma. All right, so let's move on. And let's take a look. Let's move on from positional analysis now to execution. So the levels that we took a look at on both the ES and NQ charts, these are based on an SPX, SPY, QQQ, NDX levels. These are all based on Gamma-weighted open interest. They're updated once a day, sometime overnight. Then this Trace Gamma heat map is updated every 10 minutes. Now we'll move on to real time, to execution. And we'll take a look, start by taking a look at what options traders have been doing today. And we'll start with the S&P 500. This is the S&P 500 index HERO signal. This is available to Spotgamma subscribers. It's showing options trades and market maker hedging activity in real time for the S&P 500 index components. And this is a combination of the index components. SPX, SPY, we've already taken a look at those. And then also ES and XSP. So you can see this is again, the S&P 500 index HERO signal. The white line is price. The purple line is the HERO signal. And a rising HERO signal indicates traders are taking positive delta options positions. They're buying calls and or selling puts. We'll take a closer look at that in just a minute. Market makers take the opposite side of the trades, and they hedge their delta exposure by buying ES futures when traders take positive delta positions and selling futures when traders take negative delta positions. So let's zoom in on this. Actually, before I do that, I'm going to separate out puts and calls. All right, so the purple line shows puts and the orange line shows calls. So a rising blue line indicates traders are selling puts, and a rising orange line indicates traders are buying calls. So let's zoom in on this. So what this is showing is at the open, traders were selling puts, taking advantage of the high implied volatility. And that continued up until about 10:45. Initially, traders were also selling calls. Then just before 9:45, they turned around and started buying calls. And that's when the S&P 500 started to rally. Right here, just before 9:45, as the call sellers turned into call buyers and traders continued to sell puts. So that was bullish momentum after 9:45 for about an hour. All right, so that's the S&P 500 index signal. Let's take a look at the equity signal. And you can see from the open, traders were buying puts and selling calls, again, up until a couple minutes before 9:45. Call sellers took the foot off the gas. Traders started selling puts. And this is the S&P 500 equity signal, showing options trades and market maker hedging activity in all 500 stocks in the S&P 500 index. So when the call sellers took their foot off the gas and the put buyers took their foot off the gas and started selling puts and then eventually started buying calls, S&P 500 moved higher. Then right around 10:45, put sellers took their foot off the gas and traders started selling calls. S&P 500 consolidated up until about 12:10. Traders started buying puts just before 12:15. Selling calls. That lasted for 15 minutes or so. Now it looks like the call sellers have taken their foot off the gas and S&P 500 is consolidating again. So let's take a look at this bullish opening move. Go back to ES. Let's zoom in. So here's the open right at 9:30. Pretty choppy. And that dropped down as traders were taking negative delta positions up until about 9:44. Sellers are exhausted. You can see the small magenta volume dot. Aggressive buyers start to come in. And ES moves higher. And tests that lower day they expect to move again, and then takes off pretty sharply right around 10 a.m. up to the SPY 685 level, large gamma 2, SPX 6868 zero gamma level that I mentioned before, and then finally up to and just above the SPY 686 level. And that's when the options traders took the foot off the gas. S&P 500 consolidated. And by the way, there were much better trades in stocks. We'll get to those in just a moment. All right, so let's take a look at NASDAQ now. Similar price action. Brief bullish opening drive. Let's zoom in on this. Brief bullish opening drive consolidation. Move down to the lower day they expected move, 24,782. Then a rally. Pull back to QQQ 604. Then finally up to the QQQ 608 level, just below these NDX levels that I mentioned before. So let's see what options traders are doing. So there are two HERO signals that we can take a look at for NASDAQ. First is the NASDAQ index signal, showing options trades and market maker hedging activity for the NASDAQ index components that we've already taken a look at. That is QQQ and NDX. Traders taking advantage of the high volatility, selling puts from the open, helping to drive price higher. When traders sell puts, market makers buy the puts, and they have to buy futures to hedge their delta exposure. They want to remain delta neutral. So that's the NASDAQ index signal. Let's check the Mag 7 signal. This is showing options trades and market maker hedging activity for the Magnificent 7 stocks: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. We'll take a look at some of those stocks in just a minute. So traders are, initially they were selling puts and selling calls, and now they continue to sell calls and have started buying puts. So net for the day, both the delta notional for puts and calls negative, indicating net for the day traders are buying puts and selling calls. Let's check one thing. Let's go to turn on next expiry. So what this is showing is options that expire today. Next expiry for these stocks would be options that expire today. That's shown by the light blue and the green line. Green line calls, light blue line shows puts. So it looks like a majority of the puts today are 0 DTE, but they are selling longer term calls, shown by the wide difference in the green line of the orange line. All right, so maybe taking advantage of longer term positions, or anyway, yeah, they are selling longer term calls or options that expire further out than today. All right, so that's the Mag 7. And again, the Mag 7 stocks make up a large component of the NASDAQ. All right, any questions about the indexes? All right, if not, let's move on. Let's take a look at some stocks. So I'm going to take a look at several of the Mag 7 stocks and then take a look at some stocks that are in the news. So let's start with Amazon today. Amazon having a bullish day. Zoom on this just a little bit. All right, so Amazon from the open, traders were selling puts and buying calls, shown by the rising blue and orange lines. And this looks like in a large institutional block order right here. That vertical line. So some large institution takes out a large block order, buying calls in Amazon. Let's check next expiry. And we can see this large block order here, as well as most of the call buying, is longer term. So a little bit different picture in Amazon here. Traders buying longer term calls, including large institutions. So that was a bullish opening drive. Let me turn off next expiry. Maybe this institution sold their calls up here. But anyway, this was a bullish opening drive, bullish momentum, when both the blue line, orange line move in the same direction up to call exhaustion or exhaustion. Just before, right around 10:45. Bullish opening drive, and then call exhaustion right around 10:45. Looks like call buyers have come back in. So let's see what's happening in Amazon here. Consolidation, and then right around maybe 10:10, Amazon moves higher up to the very clear liquidity target at 209, and actually just below 209. Those are limit sell orders in the order book, and they act as magnets for price. So that last move down was right around 10.09, and then strong move higher. Call buyers have come back in, trying to move Amazon up to the 210 level. So that's Amazon. Another stock, Google. Bullish opening drive driven by call buyers. Zoom in to pretty fast call exhaustion at the 310 key gamma strike. Looks like some block orders again. Long vertical lines. Large institutions taking orders. And again, longer term, comparing the orange line to the green line. All right, that's Google. Quick bullish opening drive driven by call buyers. When traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure up to or just below the 310 key gamma strike. Let's take a look at Bookmap. Go to Google. There's that strong bullish opening drive up to just below the 310 key gamma strike. Note all the limit sell orders in the order book. The heat map in Bookmap shows a history of limit orders in the order book, and price did not quite make it up to that level. Looks like maybe some call buyers have come back in. 307.50 is the hedge wall. 310 key gamma strike. Maybe they'll be able to make it up to that level. Traders at 308.80 have pulled their sell orders, but they remain at 309, 309.50, 310. All right, so that's Google. Note also the green volume dots, rising cumulative volume delta, shown on the subchart. All right, next stock, NVIDIA. And of course, NVIDIA reported earnings after the close on Wednesday. Great earnings report, record earnings, and then promptly dropped over 5% the next day. Go figure. And then today continues to move lower. Let's see what options traders are doing. Let's go to NVIDIA. So yesterday, traders were selling calls in NVIDIA, driving NVIDIA lower. I did post a setup in Discord and on X of a trade in NVIDIA. Let's zoom in on this. So initially today, traders were selling puts, taking advantage of the dip, high implied volatility, although it did drop pretty substantially after the earnings report. But nonetheless, traders selling puts initially. And they remain put sellers. So that really went on from about 9:30 to 10:45. Put sellers took the foot off the gas. And really, traders started selling calls right around 11:15. And NVIDIA moving lower. So there was a little bit of a push up here. Started right around 10, lasted for about 10 minutes, and then it's been downhill pretty steady since 11:15. All right, so there's NVIDIA. Not really much of a trade compared to some of the other stocks, or at least in the morning until this rollover, right around 11:15. High liquidity targets down below at the round numbers 180, 79, 78. All right, that's NVIDIA. All right, let's take a look at some stocks that have been in the news. Actually, let's take a look one more. Stock that I follow, Micron. Bullish morning and then rolling over since just a few minutes after 10 a.m. I'm going to zoom in on this. All right, let's first start by taking a look at what options traders have been doing. And then we'll take a look at this Bookmap chart. So let's check options traders for Micron. Zoom in on this. So traders selling puts from the open, shown by the rising blue line. And then when Micron made a higher low, that's when the call buyers came in. That lasted about 15 minutes. Call buyers took their foot off the gas, and that helped that last leg higher. And then Micron consolidated for a while and started to move lower. Interesting, just recently, large block order put sellers coming in as Micron has been grinding back down. So the put sellers became put buyers. And then the call buyers took their foot off the gas. And Micron started to move lower, grind lower. All right, back to Bookmap. One thing I wanted to point out here, I'm showing the market pulse price change indicator in the subchart here in Bookmap. And this really helps me to identify the deeper pullbacks. So let's say I'm looking for a long entry. And I can confirm it here with this bright red extreme and the market pulse price change, and it actually precedes price just a little bit. So deep pullback, this one down to just below VWAP, this one just above VWAP. Again, both confirmed by the market pulse price change indicator on the way up to the 418 level. High liquidity. And note the absorption at this level. These orders came in, limit sell orders, just a minute or two after 10 a.m., and they were not consumed. So those limit sell orders remained in place until they were finally pulled. Now, limit buy orders at 405.50. Looks like maybe some of those were consumed, but another level of absorption. All right, so that's Micron. Bullish opening drive, then a nice reversal for short. All right, now let's take a look at some stocks that have been in the news. First of all, CoreWeave. Reported earnings, and traders not very happy with the earnings. Note all the green volume dots, though. A lot of traders buying. So let's see what's driving price lower. Let's take a look at HERO. Go to CoreWeave. And traders are selling calls and buying puts. Let's zoom out on this. So from the open, traders are buying puts and selling calls, and that has set up a great divergent short. right around 946, right here. HERO signals moving lower, price moves up. Nice divergent short. As price reverses lower, as traders continue to buy puts and sell calls in coral weave. Let me check on something real quick. All right, coral weave is down 20%, 21% for the day, and about 8.5% from the open. So very, very nice bullish setup, bearish setup in coral weave. All right, on the other hand, a bullish setup in Dell after reporting earnings. Let's zoom in on this. So from the open, traders were selling puts, shown by the rising blue line. Few call sellers. Then call buyers came back in. And Dell moved down below the 140 call wall, then reversed higher as traders continued to sell puts and started buying calls. And Dell moved higher. And then finally, the call buyers and put sellers have taken the foot off the gas in the afternoon. So let's go take a look at Bookmap. Take a look at Dell. Just the opposite picture. Zoom in. A lot of green volume dots. At least on this initial push higher. There's that reversal higher above the 140 call wall. As traders started buying calls and continued to sell puts. All right, that's Dell. Bullish day. Now it looks like some sellers have started to come in. You can see the more magenta volume dots now. Key target up above, it's 150, the high liquidity at that level. And in YouTube, hello, sorry, I can't begin to pronounce that, but welcome, glad you're here. All right, so that's Dell. Whoops. All right, there were a couple of other, one other stock in the news that I want to point out. I got actually many stocks in the news. One more, Netflix. Of course, Netflix now has stepped away from the bidding war for Warner Brothers, and that is making traders and investors happy. And they're buying calls. And for the day, Netflix is up about 13% and continues to rise as traders continue to buy calls. So that's Netflix. One other stock, Block. And not reacting the same. Traders are selling calls and buying puts. And of course, Block announced a layoff. Don't know when this goes into effect. Block is laying off 40% of its staff due to AI. All right, finally, let's take a look at silver. Silver's been strong today. Classic pattern, bullish opening drive. 3 flow alerts come in, signaling significant options activity. Traders buy calls. Silver rallies, and then the call buyers took the foot off the gas right just after 11:15, maybe 11:20, and then silver consolidates after that. So a very strong call-driven bullish opening drive. All right, does anyone have any stocks they want me to take a look at? Any questions, comments? Again, stocks. Let's check back on the indexes. S&P 500 equities index, not doing much. Let's check Bookmap. All right, so like I said, there were much better trades in stocks today. Some of the Mag 7 stocks, as well as stocks in the news reporting earnings and other news like Netflix. ES continues to trade in a narrow range. And you can see the session volume profile shows most of the volume for the session, which again began 6 p.m. yesterday evening, is right around 68.62, just slightly below current price. It looks like point of control is right on this SPY 684 level. That's the purple line there. All right, so ES trading right at its point of control. Let's check NASDAQ. Note NASDAQ, most of the volume for the session is up above, so NASDAQ is trading down below its point of control. All right, back to ES. All right, again, questions, comments? Any stocks you want me to take a look at? Any other stocks in the news? Any stocks moving? Let's go back, check HERO. Let's check Trace. Remember, we're looking for SPX 6830 or ES 6840 and SPX 6870 or ES 6880. So 40 to 80 on ES. So they'll be down here and up here. And ES is somewhere in between those two positive GEX bars. Let's check. Go back to Trace. Check charm pressure. This is buying support, selling pressure due to time decay. All right, SPX right now in a red zone, indicating selling pressure. All right, potential pin target down here at 6830, lining up with that positive GEX bar, the one down below. And that shows, at the end of the day, buying support below, selling pressure up above. So for that to happen, ES would have to move down just through the lows of the day, which is right around 68.42. All right, let's check on some stocks. Let's check on the stocks that we took a look at it again. Amazon, near highs of the day. Google, reversing a little bit lower. NVIDIA continues to grind lower. Let's take a look and see where NVIDIA might go. So let's, first of all, go to HERO for NVIDIA. I'm going to shift the total signal, go to NVIDIA, shift to next expiry. So we see this is longer term bearish, short term slightly bullish, positive delta notional. In the longer term, this could be options that expire anytime after today. So again, remember for the Mag 7 stocks now, they have options that expire on Monday, Wednesday, and Friday. So this could be anything beyond today. So traders taking negative delta positions. And let's take a look at Equity Hub. All right, Equity Hub, let's take a look at the total, the put and impact chart. And this is the older total interest model. We'll take a look at this first. All right, so we see the put wall is down at 170. And note this is when this estimated gamma, see how it shifts from not very steep to very steep, and then not so much again. So we're looking for higher volatility in between, let's say 169 and 200. Call line starts to drop sharply. Just below 180, down to around 200. So a potential low somewhere between the put wall and where the call line starts to drop lower. All right, let's check the synthetic open interest model. It'll paint a little bit different picture. So what this is showing is market maker's gamma position for NVIDIA. And above the zero line here is positive gamma, down below is negative gamma. So what this is showing is if price continues to drop, I'm looking for gamma to become more negative. And what happens in negative gamma? Higher volatility. So NVIDIA, if NVIDIA moved from 189 down to 167, that would be from high volatility, low volatility, down, turning negative gamma down to the high volatility point. And that looks like that's just below 169 at 167. So as price drops lower for NVIDIA, it could be potentially accelerate down to 167. All All right, looks like HERO for NVIDIA has flattened out just a little bit. All right, so let's wrap up with Bookmap NVIDIA down to 178. So falling into this negative gamma now. Remember the peak low volatility was at 189. So that's still up above. And it looks like the options traders are really driving price today. NVIDIA dropping even though cumulative volume delta is increasing. And you can see all the green volume dots. There are a lot of buyers, but the options traders really driving price today. All right, last call, questions, comments? All right, I'm going to wrap it up. I want to thank everyone for watching. Have a great afternoon. Have a great weekend. And I will see you on Monday. Thanks for watching again. Bye.